Is your mortgage coming up for renewal in the next 3 to 6 months? If so, I want you to stop scrolling. I have one important message to tell you. Here it is. Do not renew your mortgage. All right, I know you're ready to skip and you're thinking, this guy must be crazy, but I've got a quick little story to tell you. The other day I was having a conversation with a neighbor of mine. 5 years ago, they got their mortgage. And if you all remember, rates were low at that time. Rates were around 2%, maybe a little bit lower. That's where he was sitting at. He went into his bank, renewed the mortgage at just above 5%. So what does that mean? It means now that his mortgage payment has doubled. Holy smokes. So what's the guy going to do? Are they going to go out and get a second job? Him, his spouse? They're already working. They're already working hard. They're working hard to be able to go ahead and cover the bills, cover the mortgage. You know the story. You're in the same kind of position out there. So what we're going to do instead is this. We're going to do what's called a refinance, and we're going to do an equity takeout. And here's how it works. Over the past 5 years, you've been paying your mortgage down. At the same time, your property has gone up in value. Typically here in Ontario, properties will go up anywhere from 2 to 3% on an annual basis. Now, the real estate market is slow right now, but that doesn't mean your property has not gone up in value. So, what you've gained is equity. It's time to be able to use that equity. And let's take this simple math scenario, which is if your mortgage payment upon renewal or refinance has gone up by, let's say, $1,000 a month, maybe even more than that. But let's just use the term of $1,000 right now. That's $12,000 a year. On a 3-year term, that's $36,000 extra that somehow you've got to be paying for. So you do a refinance of the property, you take out $50,000. You take that $50,000, you put it into a high interest savings account. Now you can sleep well at night because you know you got that additional mortgage payment covered. What about the additional $14,000? This is the big picture thinking. This is why we need to be able to connect on this one. You can do things like add more value to your property. If you want to do a renovation, you want to do an upgrade, you can do that one. If you've got a car payment out there, a car loan, you can knock off the car loan. If you've got some high interest credit cards right now that are stealing your cash flow every single month, you can clear those off the deck as well. My message is simple. Do not renew your mortgage. Let's look at some options. Give me a phone call, reach out, DM. We're going to set up a call, 100%, no obligation. We're going to take a look at your scenario because it's not about the rate. It's about your overall picture.